some of the key sources were, for example, the World Bank, the World Economic Forum, the International Monetary Fund, and others. In addition to that, of course, we also interviewed our clients that do business in Africa or intend to do business in Africa around the world. So it's a mixture between pure desk research and, of course, the experience and thoughts of our client base.
In the east part of Africa, 3 countries have got together to try and improve the logistics just by cutting the bureaucracy and giving people the responsibilities for making sure that the port operates efficiently, by having one chain of command at the port, but also by removing just bottlenecks like roadblocks, way bridges that are necessary just to move cargo from one place to another. And they've managed to reduce the cargo times from Mombasa to Uganda from 18 days to 5 days. Now, that did not require any investment of significant dollars. It was just about doing what is right to do.
I do not really think that we should talk about the worst or the best, because there are a lot of things that you have to take into consideration when you talk about benchmarks. But when you look at Nigeria on the one side, which is really a star, then I would say we can see on the other side of that, we can see DRC. And the reason is that DRC has the largest endowment of minerals like copper, diamonds, and cobalt. So there's a huge potential for this country. But on the other hand, we also see poverty. We have a very, very low educational level. The economy is not diversified. It's subject to price volatility. When we look at the political situation, that is really uncertain. And especially the transport infrastructure is more than weak.
What we see is significant opportunities for greater collaboration between TFR, Transnet Freight Rail, and logistics service providers that are predominantly road-based. I think what the logistics service providers can bring is they can bring the rail mode into their supply chain. Generally, what we see is that many of the manufacturing and retail concerns are less well located against the rail network than they would otherwise have been. So you need this kind of mix of modes in order to solve some of their logistics challenges. And this is where some of the existing logistics service providers can bring customers to TFR as opposed to rail trying to seek those customers on its own. And this is a unique kind of value proposition. So what you've seen recently is TFR signed agreements with Imperial, with Barloworld Logistics, and with some other players to try and get this right. This is the opportunity that really exists, and we've seen similar strategies work very effectively in the US and the European rail markets.
We have a situation which I can reflect on, which is the Kenyan situation, where 90% of the traffic that leaves, or the cargo that leaves the port, goes by road as opposed to rail. It should be the other way around. And therefore, there's an opportunity to improve the performance of the rail. But when you look at rail, it's very expensive to invest. For example, I gather the railway line from Nairobi to Mombasa, the standard gauge would cost in the magnitude of about $5 billion. I don't think you're going to get private investors who are going to put down that sort of money on rail. Having said that, I think there are many private investors who would invest in rolling stock if you had a railway line that was operating and would be able to do the business that requires people to move cargo from Mombasa to Nairobi. So it's about opportunity. I think the government has the responsibility, the financial muscle to put down track, but not necessarily to operate locomotives, because government should not be in business. It should really be putting down infrastructure.
The biggest single constraint that we've identified in this study is really the lack of effective, well-managed infrastructure that allows you to provide a reliable transport service, particularly in rail and particularly in ports, where infrastructure levels are generally lower than on the road freight side. Road freight is generally bearing the brunt of poor infrastructure in the rail environment, and that is a considerable challenge for African trade and logistics, but also for growth in these economies.
Yes, I fully agree, Andrew, but I would like to add airports. When you look at 1 billion people living in Africa and becoming consumers in the near future, I suppose that it's only a question of time that these people also would like to travel, and not only in their territory, but intra-African, but also to South America, to Europe, and other places. And I always say infrastructure is the backbone of wealth and prosperity.
I think for me, one of the surprising results of the study is the diversity of the logistics requirement that emerges for Africa. We had some preconceived notion that we would be focusing on logistics around minerals, oil and gas, because that is the predominant exports from Africa. But what we do see is in a very rapidly emerging middle class and a very rapidly emerging consumer and retail sector, and a lot of interest by retail and consumer type companies